Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are today's top stories. As widely expected, the Bangko Sentral delivered a 50 basis point rate hike at its last policy meeting for the year. This brought benchmark interest rate to 5.5%, the highest in 14 years.
The Maharlika Investment Fund bill was hastily passed on third and final reading at the lower house after President Marcos certified the measure as urgent.
Cash remittances hit a 3-month high in October ahead of the holidays.
And the Malacanang reports that President Marcos's participation in the ASEAN-EU summit yielded some 9.8 billion pesos in investment pledges. We begin today's broadcast with the Bangko Sentral delivering a softer 50 basis point hike at its last monetary policy meeting for the year. Now, this brings the benchmark interest rate to a 14-year high of 5.5%. That's the highest since the 6% print in November 2008. The overnight deposit rate was also raised to 5%, while overnight lending was increased to 6%. This move followed the 50 basis point hike by the U.S. Fed at its December 13 to 14th meetings. Now, since May, the Bangko Sentral has raised key policy rates by a cumulative 350 basis points. BSP Governor Felipe Medalla says the Monetary Board arrived at its decision after noting the further uptick in headline and core inflation last month amid pent-up demand. The BSP kept its average inflation forecast for the year at 5.8%, but raised inflation projection for next year to 4.5% from 4.3% previously. The BSP is now seeing less urgency to match the Fed's monetary tightening next year, but still signaled more tightening ahead as bringing inflation back to the 2 to 4% target remains their top priority.
Cash remittances rose to a 3-month high in October as OFWs took advantage of the strong dollar ahead of the holidays. Money sent home by migrant workers stood at $2.9 billion in October, with remittances from both land-based and sea-based OFWs seeing an increase. The peso slumped to its record low at 59 against the greenback around mid-October, which may have helped push higher remittances. Aside from this, economists say that high inflation in the Philippines is also a factor for migrant workers to send more money. The U.S. remained as the biggest source of cash remittances, followed by Singapore and Saudi Arabia. As the Fed keeps doors open for steeper hikes in the future, is the BSP going to keep in step, or will they start to take on a different path at some point? That and more with Robert Dan Roces, Chief Economist over at Security Bank. Dan, good day. Thank you for joining us.
Good day. Good to see you.
All right, first, let's discuss that. The BSP rate hike pretty much expected there, and until this point, we have been mirroring how the Fed is moving. When do you see us diverging from that path, and when do you see at least the BSP rolling out tamer hikes?
Well, both the BSP and the US Fed are sounding hawkish on the inflation fight. Should the Fed end up moving towards smaller hikes in 2023, look for the BSP to match the size and make the case on why our inflation situation still needs that. The prime inflation driver is food basket, which has a chance to subside at the end of the first quarter next year by probably better imports and some base effects as well. This means the need to maintain a 100 basis differential versus the Fed rate and allow the peso a fighting chance against US dollar fluctuations. So at this point in time, we're not seeing some divergence in terms of unmatching the Fed base.
And exactly how do you see them moving by next year? By how many points are you expecting them to increase? And is a pause even possible? Or at least a cut?
Well, the dot plot actually has some very interesting figures there. I refer to the US dot plot. So they're looking at 5.1% as the terminal rate next year. So that means we should be at around 6% if we want to keep to the 100 basis differential. Now after that, it will be it should be all data dependent. If the Fed pauses, we can afford that pause as well. The case for the US Fed pausing is actually strengthening as of latest data from the US. Now you have CPI, PPI going down. PPI being a very good forward indicator of where US CPI will be. So it's all on a downward trend. You have gas prices trending lower as well. You have goods consumption down. You have retail sales, and entire manufacturing also below its index, below the zero index. So that actually strengthens the case that the Fed could end in the rate cycle soon. Although we do expect a 25 basis point downshift again in the February meeting, probably another one in March. So with that, the BSP will likely be matching those as well.
Okay, let's go to the real deal with inflation for next year, Dan. No? So the outlook is above 4% still for next year by the Bangko Sentral. But tell us, did these rate hikes of 2022 arrest the inflation expectations for next year? Did it arrest the second round effects, the spillover effects that could have happened by next year? And will we be seeing, a faster deceleration of prices? And when will that come, as early as the first quarter?
Yeah, well, that projection, 4.5% average next year, actually means that there is going to still be some elevated inflation in the first half. So, we could expect some downward trend, probably, starting around end of March. And this is mostly because of the base effects. So the base effects will actually be helping us in terms of the headline reading. So what that also means is that there's going to be some trajectory moving towards the 2 to 4% target of the BSP, probably hitting it by middle of next year. So that's around June or July. We did see, actually that was the most important development out of the BSP meeting yesterday. So if you combine that with Governor Medalli's hawkish tone, that also suggests that the door remains open for more rate increases early next year. So our base case actually is that headline inflation will return to the BSP target of 2 to 4% by the middle of 2023. So that will afford the BSP some pauses already. So they could, if the Fed actually pauses, that also means that there's scope for the BSP to pause as well.
Okay. Now, sir, we're at the end of the year. Looking back, have we addressed the supply side issues? In terms of the food crisis, probably the wage hike issues, the transport crisis, the energy prices. Have we in any way, especially with BBM's admin, have they delivered such that next year we will be feeling less pain?
In terms of inflation, overall inflation, the main driver is food. So if we drill down on the data, we're seeing several food commodity items that are spiking. So that's driving overall inflation. So that's the food basket is around 32% of inflation. Now, if we juxtapose that with imports out of, if we juxtapose that with food imports, we will see that the items that have been driving inflation up, in terms of the importation, some have actually declined year on year to double digits. So we're not really importing compared with previous years. So what that means is food inflation can be solved partly with higher importations as well. But that's easier said than done, given FX has declined. So that will mean that it's more costly for importers. But that probably could be a solution as well. So if you do expect, if you anticipate more imports coming into next year, that will ease the price burden in terms of the food basket. The other story there is food inflation could be transitory. It's it's the holiday season now. So seasonally, there's very high consumption. So retailers, sellers actually take advantage of the demand. So prices are tend to be higher in the holiday season. So uh, uh, in the past, no, meaning before the pandemic, prices tend to go down after the holiday
Mm.
season. So in January, we'll have to watch out for that, especially the core side.
All right.
Core
Okay.
inflation, the main driver, we have plus of 10% weighted in the CPI. It's going up partly because of demand, but partly because of food prices as well. So it's bleeding to the core already. That's why it's more broader.
Okay, now, of course, one of the bigger storylines of the year, the weakness of the peso. But of late, we've been seeing it strengthening at 55 levels. Is the worst over for the peso here? Or should we be bracing for some depreciation as well for next year? And what would this mean as well for remittance figures?
Well, the strength of the peso it can be attributed to the weakness of the dollar. The DXY or the dollar index is, as of late, is strongly correlated to our FX levels. No? It's correlated by around, um, I think it's 94 to 96%, if I'm not mistaken, on this in our last analysis. Historically, it's only around 90%. So you can imagine the sensitivity of the DXY fluctuations. No? Now we're seeing a bit of a divergence between the strength of the DXY and the FX levels. So what that means is we could be becoming more sensitive once again to the trade deficit. No? So we're still in a wide trade deficit. So what that means is locally there's still going to be some demand for dollars, and the slowdown in China is not helping. So one of our biggest trade partners is still trying to recover now. So exports remain down, so that contributes to a wide trade deficit. So the peso could likely be depreciating a bit. We didn't see it moving by as much. When the Fed declared their new policy rate and when the BSP adjusted the policy rate as well. So there wasn't much sensitivity to the BSP and the Fed's move in terms of the catalyst. So it could be the trade figures that will, or probably the prospects of trade that
Okay.
will be moving the peso. Yeah.
And finally, sir, growth outlook. No, this year was a painful year when we talk about inflation and uncertainty, but seems to end on a high note
Yeah.
in terms of we're hitting the upper end of the targets of the Bangko Central and
Yeah.
surprising most of the economists here despite all of these headwinds. Do you think that there's a possibility that next year we might be surprising as well on the upside? Why the downgrades of so many houses, the ADB, the most recently, especially as we're hoping for inflation to go down? And is there upside risk if the government continues on its spending path? Is this going to be an expansionary year next year for the government, or is it tightening our belts?
Well, if I have to answer that now, it will be tightening our belts now. I mean,
Okay.
there's a lot of headwinds that will lead into 2023. So inflation will still be there in the first half, probably falling to target next year. But I think the bigger dampener will be elevated interest rates. So a lot of central banks globally will pause the rate cycle, but we will be at that elevated level. So household consumption being the biggest driver of our GDP, but 75% of GDP, that was a surprise in the third quarter. All of us actually underestimated the strength of private consumption. So we were glad to be proven wrong. No, it's still there. And I think fourth quarter will still be outsized in terms of private consumption. You have retail, you have the retail industry, you have the food industry, all hitting their 2022 targets by the third quarter. So that tells us probably by fourth quarter there's still going to be some outsized activity in terms of private consumption. So there's that. Fourth quarter will be good. will likely end the year at 7.5% growth.
Okay.
Next year will be a different story. Revenge spending, which is the driver right now, will actually be waning next year in the face of high interest rates and some general cautiousness in terms of a global slowdown. But private consumption should still be the driver. Meaning, people will still have some money, people will still be earning. The unemployment rate is very good. So
Okay.
we're back to the pre-pandemic rate already. So I would say consumption as business as usual will be there now. So it's still going to be the driver, but the interest rates will be a factor now. So
All right.
and the global sentiment will also be down. So that's going to be some dampener as consumers shift to being very content more spending or fear of foreigners to come.
Sir, projection next year.
Well, we have it at 6.3%. Still a very
6.3.
decent number. Still a decent number. That's going to be prime consumption driven. Also, I forgot to mention, next year the second tranche of the killing law will take effect. So that means the cuts. Some cuts in terms of the income. So income tax law. So there's going to be more income for consumers. That will bleed into the household consumption side.
Right.
But in terms of government outlay could be lower. That has been targeted already. There's going to be fiscal consolidation next year. So there's going to be an offset there.
All right.
All right, interesting insights, but still above 6% print despite
next
the
year?
high base year, hopefully, this year, and still above
very decent.
7.5% by the year end, hopefully there. Thank you so much, Robert Dan Roces, Chief Economist over at Security Bank.
Pleasure, thank you.
Now, let's pause for a quick break, but coming right up after that. The bill seeking to create Maharlika Investment Fund hurdles the lower house ahead of Congress's holiday break.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Delos Santos.
And I'm Danie, Laurel. So the proposed Maharlika Investment Fund hurdles the lower house ahead of time after getting certified as urgent by no less than President Bongbong Marcos.
Now with that, it's now up to senators to scrutinize the bill and iron out points of contention. Marian Enriquez has the report.
The lower house has approved the bill creating the Maharlika Investment Fund on third and final reading. Before this, lawmakers sought to make compromises on the bill. During the period of amendments for the MIF bill, ACT Teachers Party List Representative Franz Castro proposed to increase the percentage that will be remitted to the national government for social welfare projects from 20% to 30%. But this was thumbed down by House Ways and Means Chairman and Albay Representative Joey Salceda, who is one of the sponsors of the bill.
If we make it 30, nothing will be left of the fund. So wala na akong palalaguin, wala na akong ibibigay na ayuda. So in other words, Your Honor, there is some financial limitations to really just emaciating the MIF to a point wherein it can no longer perform the objectives that the proponent wishes.
Can we have it 25%?
Your Honor, we accept. 25.
Well, the majority also joins the proposal in accepting the compromise agreement.
Despite this compromise, the Makabayan bloc is still not convinced that the Philippines is ready to establish a sovereign wealth fund.
Huwag na tayong magpanggap sa usaping ito. Lubog tayo sa depisito, trilyon-trilyon ng ating utang, wala tayong surplus, pero bakit gusto pa rin nating isugal ang pondo ng financial institutions natin?
House Speaker Martin Romualdez, who was also part of the ASEAN-EU summit delegation in Belgium, told the media that he was able to talk to Senator Mark Villar, who will be filing the counterpart measure at the Senate.
It's actually picking up from what was approved at the APRO level, no? So we have a refined measure, no? And when we spoke just last night, he says he will use the draft bill that we've already refined through APRO, approved by the banking committee that's now on the floor, as the starting point. And he's very, very enthusiastic about it.
With the House approval, the bill on the Maharlika Investment Fund is now at the hands of senators. For News 5, Marian Enriquez, we are One News.
And still on the Maharlika Fund, Bangko Sentral Governor Felipe Medalla says the central bank's concerns over the planned sovereign wealth fund have been, quote, completely addressed. Medalla said he now supports the bill's passage, adding that the decision of lawmakers to remove proposed contributions from state pension agencies as the wealth fund source was a, quote, good response.
President Bongbong Marcos touts 9.8 billion pesos worth of investment pledges yielded from his Belgium trip for the ASEAN-EU summit. Among the secured pledges is a 4.7 billion peso investment from multinational consumer goods company Unilever. President Marcos also discussed issues on maritime safety with French firm Osea, which plans to put up a 1.5 billion peso shipyard in the Philippines. Aside from investments, the president said EU member nations pledged to help create opportunities for Filipino workers.
European business confidence in the Philippines is high, as evidenced by the expansion plans of European companies that we met in the sectors of fast-moving consumer goods, in shipbuilding, renewable energy, and green metals.
Now, aside from potential investments, President Marcos also said he was able to invite Belgium's King Philip to the Philippines.
I was also able to call on the King of Belgium, who fondly recalls his visit to the Philippines many years ago, and I invited His Majesty to visit the Philippines again.
Now, the Asian Development Bank will lend the Philippines $4.3 billion annually until 2025. The ADB says this would support infrastructure, climate change, and food security projects in the country over the next 3 years. Now, under the lending program, ADB lists 3 projects in the advanced stages of design and are being considered for approval. These are the MRT Line 4, the Bataan-Cavite Interlink Project, and the Laguna Lakeshore Expressway.
Meralco has signed an emergency power supply deal with Aboitiz-led GN Power. The deal covers the supply of 300 megawatts from GN Power's Dinginan plant in Bataan. This new power supply agreement will be in effect until January 25 of next year. Meralco said the deal will help mitigate the impact of higher power rates since it was previously sourcing supply from the electricity spot market. The deal with GN Power comes on the back of Meralco's fallout with San Miguel South Premier Power Corporation.
Ayala Land is pouring an initial investment of 5.2 billion pesos to jumpstart its 49th estate in Plaridel, Bulacan. Now, the initial investment will be used to develop the first 20 hectares of the new estate Crossroads into a center for trade and commerce. Ayala Land says it will kickstart the commercial node by building retail spaces to fill the need of the surrounding residential and industrial projects. Aside from retail spaces, Ayala Land is also eyeing to build a public transport terminal which would link the province center to Quezon City. The developer aims to complete the commercial area within 5 years.
And those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away, we'll give you the latest on the local bourse. When Business World Live returns, stay with us.
And they're still watching Business World Live here on One News. Now, Dan, the BSP pulling the trigger as expected, but was that enough to actually quell the markets?
Maybe not, Jess, because there are a lot of offshore issues still going on. You have a more hawkish Fed, and that's been shaking the rest of Asia here. We are no exception. We are down a touch back to 6,500 levels. You did observe earlier on to this morning, it was at 6,400 levels. The dollar getting stronger yet again with those hawkish Feds. You've got oil down yet again because of a looming recession over there. And of course, we still have the inflation forecast next year above target, which is what Robert Dan Roces says, was a sticking point of yesterday's meeting. Economists have said there is more work to be done to tame inflation here in the country, apart from this 50 basis point rate hike. But let's take a quick peek at the peso as well here, Jess, and how that's moving. After this 50 basis point hike, which mirrored the Fed, actually weakening a touch here, 55.755 to the greenback. And I did want to mention that yesterday, despite all of these headwinds, we did see one braving the IPO market before we end the year, and that is Premier REIT. And of course, this is the renewables-led venture of Manny Villar, and that listed and went up by 6.7% to close yesterday, up on its first trading day at 1 peso and 60 centavos. The IPO price was 1 peso and 50 centavos, but you can see quite a pullback this morning. It's now trading close enough to its IPO price at 1 peso and 53 centavos, Jess.
All right, but this time down, let's check in on telco giant PLDT. They're cashing in on more telco towers.
Exactly. So this just in this morning, they've signed a deal for the sale of 650 telco towers for 9.2 billion pesos to a unit of Aboitiz, which is actually called Unity. Let me just clarify that. But nevertheless, this is actually some big news there that brings the PLDT earnings from that to around 86 billion pesos. It's called Unity Digital Infrastructure. So some cash for PLDT there, but moving back to the stock and how that's been moving, you can see that down by close to 6 8/10% for the past 3 days, but this morning going against the index slump and up by 0.4%, Jess.
All right, that's it for today, December 16, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess Delos Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.